Asia, a gateway to global trade, way east, meet west. Over the past decades, this vibrant nation has harnessed its strategic position and resources to achieve remarkable trade milestones. From steady growth to record-breaking peaks and even facing challenges in recent years. Malaysia trade's performance tells a story of resilience, innovation, and adaptability. Today, we embark on a journey to uncover the trends, milestone, and insight behind Malaysia trade performance. What fueled the growth, what challenges emerge, and where we headed next.
Hello and good morning. Today, with me, we will discuss the trade performance of Malaysia over the past decade. There is a clear upward trend in both export and imports over the period, indicating a growing trade volume for Malaysia. While the overall trend is positive, there are some fluctuations in both export and imports from year to year. The balance of trade shows a general positive trend, suggesting that Malaysia have been exporting more than its import. Both export and imports experienced significant growth in 2021 and 2022, likely due to the recovery from the COVID-19 pandemic. Next, let's be examining domestic export. As we can observe, domestic export have shown a generally positive trend with some fluctuation over the years. Notable periods of growth were observed in 2021 and 2022. The growth pattern appears to be relatively consistent and steady, with some years experiencing higher growth rates than the others. Now, let's turn our attention to re-export. Re-export have also displayed a positive trend, although with more pronounced fluctuation than domestic export. Similar to domestic export, significant growth was observed in 2021 and 2022. However, the growth pattern of re-export is more volatile, with periods of rapid growth followed by periods of lower growth or even decline. When we compare domestic export and re-export, several key different emerge. Both sectors have experienced of significant growth, particularly in recent years. However, re-export have shown a higher degree of volatility in their growth rates than domestic export tend to exhibit a more consistent and steady growth pattern, while re-export display a more fluctuation trend. Let's move on to the import by end use chart. As we can see from the chart, intermediate goods consistently dominate the import landscape. This indicates a strong reliance on import raw materials and components for domestic production. Capital goods have shown significant growth, particularly from 2021 onwards. This suggests increased investment and industrial activity driving demand for machinery and equipment. While consumption goods have experienced some fluctuation, they are generally from a smaller portion of total imports. For the shift in import patterns over the years, the most striking trend is the surge in capital goods imports. This suggests a potential shift towards investment-driven growth. Intermediate goods have remained a stable component of imports, highlight the country's reliance on imported inputs for manufacturing. Consumption goods have shown some variability, possibly influenced by factors like consumer preference, domestic production, and import policies. Next, we will discuss about the major export sector charts. Let's start with the powerhouse of Malaysia export, the electrical and electronic products sector. This sector clearly dominates, accounting for a significant portion of the country's export earnings. The dominance reflects the strong presence of the electronic industry in Malaysia, driven by factors such as skilled workforce, robust infrastructure, favorable investment climates. We turn our attention to the petroleum product sector. As a major oil and producer, Malaysia benefits significantly from export of petroleum products. This sector contributes to government revenue, foreign exchange earning, and employment in related industry. Electrical and electronic product sector clearly dominates Malaysia imports, indicating a strong reliance on technology and electronic for various industries. This reflects the country's commitment to the technological advancement and innovation. The import of petroleum products highlights Malaysia's need for energy resources, particularly for transportation and power generation. This sector is crucial for ensuring energy security and meeting the country's energy demands. The third major import sector is machinery, equipment, and parts. This sector is essential for Malaysia's industrialization by modernization effort. By importing advanced machinery and equipment, the country can enhance productivity and compete in the global market. Now let's discuss about the major export destination chart. The top export destination is Singapore. The strong economic and geographic ties between these two countries have fostered a deep-rooted trade relationship. Factors contributing to this strong relationship include geographical proximity, complementary economies, and efficient logistic infrastructure. United United States is another major export destination for Malaysia. The US market offers significant opportunity for Malaysian products, particularly in the electronic and manufacturing sector. This factor driving include strong demand for high-quality products, favorable trade agreements, and growing economic ties. Next, the major import sources chart. China's dominance in the global manufacturing sector and its proximity to Malaysia make it a major supplier of a wide range of goods, including electronics, machinery, and consumer products. Singapore, a neighboring country and a major trading hub, is another significant source of imports for Malaysia. As a global logistic and financial center, Singapore facilitates the efficient flow of goods and services between Malaysia and other countries. Malaysia imports have a significant impact on its economy. Firstly, can access to affordable goods. Imports can provide consumers with a wider range of products at competitive prices, boosting consumer purchasing powers. Next, input for local industry. Imported raw materials, intermediate goods are essential inputs for local manufacturing industry, enabling them to produce goods and services more efficiently. Third, technology advancement. Imports of machinery and technology can help local industry upgrade their production processes and improve productivity. Lastly, knowledge transfer. Trade with advanced economies can facilitate the transfer of technology and knowledge, contributing to skill development and innovation in local industry. Last but not least, we will talk about contribution by state in Malaysia. The biggest contribution states is Selangor and Pulau Pinang. These states are the clear leaders in exports, accounting for 31.5% and 17.8% respectively, which highlights the concentration of manufacturing and export-oriented industry in these states. Johor and Kuala Lumpur also contribute significantly with 20.4% and 4.7% share, respectively, while for the remaining states, including Sarawak, Perak, Kedah, Melaka, Negeri Sembilan, and others, have smaller export shares, ranging from 2.1% to 7.9%. The central region, particularly Selangor and Kuala Lumpur, emerged as the economic powerhouse, driving a significant portion of Malaysia export. This is likely due to the concentration of manufacturing, electronics, and automotive industry in this area. Pulau Pinang and Kedah, located in the northern region, contribute notably to export, indicating the presence of manufacturing and export-oriented industry in this area. Johor, in the southern region, also plays a significant role in export, likely due to its strategic location and industrial development. Finally, the eastern states and Sabah and Sarawak have relatively smaller export contribution compared to the central and southern region. This suggests potential disparities in economic development and industrialization in this area.